This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe. Welcome back. So I get a lot of questions related to different markets. They see videos on that I've done on, stocks, whether it be, monthly, weekly combinations or weekly dailies, and they're asking, can it be done on intraday trading? Can it be done in Forex? Can it be done in ETFs, right? And so the answer to that question is a yes. All right. Now, each market might have its own characteristics where taking targets and because of the volatility, you might need to be a little bit more aggressive in certain markets in terms of taking profits versus others where stocks, once they start trending, you can make pretty good money by using some kind of a scale and trail method, which is what I recommend in my courses. So, but with other markets, especially ones where you're trading bursts of moves, like we see a lot in Forex, I tend to recommend being a little bit more aggressive with your profit-taking approach. Now, what I'm going to do today is, because there's been more volatility and I haven't really covered an intraday trade in a while, I'm going to show a couple different intraday trades on the SPY. And I really like using these intraday charts for teaching because there are so many little nuances that take place in specific trades, and they take place in all the time frames. Whether I'm showing it on a 5-minute and a 1-minute today, but this same pattern could develop on a monthly and a weekly. So you want to take whatever I'm showing you and apply it to the longer term charts. All right, let's go ahead and get going with this. First is to say the technique I'm going to talk about today is covered in my book in detail. And the pullback trade, I think, is the essence of what I try and teach. I do like a breakout trade as well, but the pullback trade is covered in detail in this book. You can go to rabilstockresearch.com /book for more information. Okay, so I've got the spider chart up. I've got a 5-minute on the right and a 1-minute on the left. All right. And I want to zero in on two specific trades that set up here. First one is this pullback to the rising 18 as the 40 was turning. But a key thing that we're watching here is this zero line crossover of MACD. All right. The second one is this little pinch play here where we have room to the zero line. All right. So this is a pretty big key for me. We want to learn how to trade around the zero line. All right. There can be opportunities. So if this is our zero line, we want to look for opportunities either crossing to the upside, crossing to the downside, or a lot of times I look for the reversal where it doesn't cross and it turns, right? But there are also trades up here where we're working our way back to the zero line, or down here where we're working our way back up to the zero line. All right. So I want to show a couple different examples. This is a zero line crossover, and we get a nice pullback to a rising 18. All right. Now I've already scrolled over so you can see what's taking place on this time frame. All right. Now I talk a lot about an ABC correction. We get that ABC on this pullback here. So this is just a simple pullback on this time frame. But on this time frame, we get our ABC. All right. Now, during the course of that ABC, we see a decent amount of overrun where the MACD doesn't just come down towards the zero line and turn, or just maybe barely cross it. It crosses over enough to actually get the signal line to cross as well. Now, when that happens, I think we have to be a little bit more careful about just entering the moment it starts to turn back up. Because remember, we're trying to get in on this pullback. All right. Now, sometimes, and the reason why I like showing these intraday trades is because they show all the different, there's probably hundreds and hundreds of ways that we can get a reversal pattern that can develop. All right. And if you look at this time frame, it doesn't look all that crazy, right? We get a bottoming tail, and you probably want to buy the moment it takes out the high of the bottoming tail. Well, that can be the case, but what happens a lot, especially when we get consolidation pattern like this prior to the bottoming tail, is that you could go up and then you could come back down and consolidate. In this case, it would have been better off just taking the reversal here without it and kind of ignoring this time frame. right? Because you would have been in at a lower price. But what I talk about a lot is that I don't care about getting in at the low price. I want to get in at the low risk. And the way to do that is to wait for this time frame to be in agreement with this time frame. All right. So in this case, yeah, we had the trend line break, but because there's overrun and because the red DI caused the ADX to cross above 25 here, I'm going to wait a little bit. I don't necessarily want to jump in on the first move. Now, there was a higher pivot low here where we took out the close below the high bar of the rally and then turned back up and closed above the low bar of the rally. And you could have considered that the first test of the 18. Nothing wrong with this signal. But this one is so crystal clear with this two lower highs, and we get our pinch play to develop so crystal clear here. And notice how green DI gets going again. Whereas on this move, this higher pivot low, we really hadn't had enough confirmation of green DI. And remember, this was pretty strong. So when that happens, I typically want to see green get going again. And in this case, to me, this is the low risk entry point. All right. Now, yes, it's on this bar here. All right, we've already made a decent move off the low when you look at it on a 5-minute chart. But to me, we've got a pretty good momentum, and this is really just turning the corner to the upside. All right, we've got very strong reading in ADX to the upside here. And then we go through this consolidation phase, and now green DI is going to get going again. So I'm sort of expecting continuation to the upside when I see this. The beauty of this is that I can put this trade on with very minimal risk, and I feel pretty confident that I'm going to get a decent leg to the upside. So this is a modified version of a 2 time frame pinch. And the reason why I call it modified is we really don't, because this made a slightly higher high here, we really don't have the lower highs here that qualify it from a letter of the law standpoint. But in theory and in spirit, to me, this is a 2 time frame pinch. All right. What this allows, the 2 time frame pinch allows you to get the 18 going on the smaller time frame, so it's an agreement, right? It allows you to get this going back to the upside, so you're not in early and you don't have these false stop outs before it actually is ready to turn. By the way, if you're enjoying the content, hit that like button and also subscribe. It helps with the YouTube algorithm, so I appreciate your support. All right, let's look at this second trade, because we had this move to an upside here where there was divergence in place. I'm going to move this forward so we can just see how this played out. All right, so that move to a new high was right here. We moved to a new high. Now, the reason why I'm not bringing up the divergent pinch, so that's a divergent pinch. We stayed below the signal line while this made 3 higher lows, all right? Nothing wrong with that trade, but on the lower time frame, it didn't really offer us a great entry unless you just wanted to be really aggressive and take the red bar, the big red bar declining back through 520. All right, but if you notice the way it played out, we had these big declining bars, and then we got this huge red bar. All right, now we have already kind of retraced all the way back down to the next support zone. I don't know that I want to play this pinch here, because it's already made such a big move. Do you see the difference? So to me, this is much later in the decline. I don't think it's worth it trying to play this. Now, you probably would have made decent money in this, playing this. And again, on this time frame, it was the first pinch after a decline through the 0 line. So it ended up having a little follow through, but you would have had to have been pretty nimble. And then it came roaring back. But then look at what happened. We actually get a setup on this time frame. This is the key that I wanted to get across. We want it to look like a setup on the higher time frame, right? So we get a move back to here, whereas triggering here isn't quite as good. Now, I know you might say, well, this was a little late too, but it still was a little pullback to the 4. You had only gone up 2 bars. To me, this was still doable at this point, right? But this one had such a a nasty decline, 3 to 4 bars in a row, that I probably want to wait for a rally here. We got that, and on this time frame, we got our ABC. This is a real key to what I wanted to get across. Another ABC. All right, just like I was talking about on the original trade on this, we got our ABC on the 1 minute on this pullback. All right. Once we get that ABC, especially one that makes a higher high, we can draw on our trend line and we can see that we broke the trend line here, and it offers us a pretty nice opportunity right at the moving averages with a zero line reversal. And notice how there's no strength in the rally. So we get an ABC to the upside with green DI barely making it to 25 and the ADX staying really low. Absolutely no volume associated with the rally. So we want to look for these. They're a little sneaky, and I'm only looking for this to play this back to the zero line. I'm not looking to be a hero. I'm literally letting this go. And then on this bar here, this was a pretty big red bar when it was down here. I might have actually been thinking I want out. Certainly by the time this was playing out or bottoming like this, I would have wanted to be exiting on that bar. So one of these two bars I'm selling out of this after getting a really good entry on the 1 minute. So if you look at it, you're talking, you're in somewhere, let's just look at that level, somewhere around 519, 15 or 20 or something like that. And you can actually see a lot more clearly the big red bar here, right? We get a move sideways consolidation, and then we make another move to the downside. This is the bar. I'm probably gone, right? I mean, somewhere in this area here is my exit point on this type of trade because it's a zero line retracement. All right, that's a lot different than a move to the upside. I'm probably going to try and milk a trade like this a little bit more than I am going to trade a retracement back to support, trend support. You see what I mean? That is a totally different situation. So this is more of like a counter trend trade, and this is more of a counter trend trade to the bigger trend, and this is more of a trade with the trend. All right. Now, keep that in mind when you're going through and trying to determine how to create a trading plan for each individual stock. Every time you do a trade, you should have a plan for that specific trade, have it in writing, and I think you'll have a lot more success. All right. Let me know if you have any questions. Thanks.